Welcome to All Stocks Index, a video series that breaks down financial performance of every publicly traded company. In this video, we look at Tesla's 2023 financial results. Tesla was founded on July 1, 2003, headquartered in Austin, Texas. Current CEO Elon Musk. Number of employees 140,473. Market cap is $711 billion. Current stock price $222. Tesla belongs to a consumer discretionary sector in auto manufacturing industry. Tesla generates revenue through a variety of business units, including automotive sales, automotive regulatory credits, automotive leasing, services, and other energy generation and storage. Let's analyze Tesla's financial performance for fiscal year 2023 by breaking down the 10K report. Let's begin with the income statement. Sale of products and services produces revenue, and after paying off all expenses, the company is left with net profit. Most of Tesla's revenue comes from its auto sales, 81%. But what's remarkable is that energy generation and storage sales saw a 54% increase year over year. This rise was primarily due to an increase in deployments of Megapack. Tesla's annual revenue has been growing for the last 10 years at an average rate of 80%. In 2023, Tesla made a record-breaking $96.8 billion. Cost of goods sold was 82% of total sales. To name a few, Tesla pays for direct and indirect materials, labor, manufacturing overhead, shipping, and infrastructure. Gross profit in 2023 was $17.6 billion. Half was spent on operating expenses, specifically research and development, which was almost $4 billion. Selling, general, and administrative expenses were almost $5 billion. With growing revenue, Tesla has more money to spend on R&D, even if it's a smaller percentage of total revenue, thus reducing operating expenses and increasing operating income. However, 2023 operating income dropped to 9% of revenue compared to almost 17% in 2022. Accounting for tax and other net expenses, we get a breakdown of all Tesla's expenditures. Thus, after subtracting all cost, we are left with a net profit of $15 billion. Tesla's net profit has increased drastically in the last 3 years. In fact, Tesla only became profitable in 2020, which skyrocketed its stock price, making it one of the most valuable companies on Wall Street. Profit margin, which is a ratio of net profit to total revenue, was 15.5%. As mentioned, 2020 was a pivotal year when profit margins turned positive. Earnings per share, a ratio of net profit to shares outstanding, was $4.30. Earnings have been growing with significant jumps in the last 3 years. However, actual growth rate may slow down. Number of shares outstanding slowly increased, while profit had a significant seismic shift in the last 3 years. P/E ratio, a ratio of company's share price to its earnings, was 74.5 at the time of the reporting. Historically, Tesla's stock price has been volatile and in high demand. Its P/E ratio is significantly higher than any automotive company and even higher than average P/E of the tech sector. Moving on to the balance sheet. Total assets equal total liabilities plus equity. Property, plant, and equipment is Tesla's largest asset. But what's surprising is that Tesla has very little long-term debt. Let's examine Tesla's ability to pay its short-term debt obligations. First, the cash ratio. We take the most liquid assets and divide by current liabilities. Tesla came a long way since 2017 and 2018 when it struggled to cover its short-term obligations. Now Tesla has plenty of liquid assets. Current ratio is around 1.9, so current assets are also twice as large as current liabilities. Similarly, quick ratio lets us know that Tesla has enough money on hand to pay its bills and staff, a tremendous recovery from the times when the company had only a few weeks of cash left and bankruptcy seemed inevitable. Furthermore, Tesla's total assets are 10 times greater than its total debt. As for debt-to-equity ratio, it has reduced over the years to its lowest level of 19%, which shows the company is more funded by equity assets and has very low obligations to repay to creditors. In the last 3 years, growing revenue pushed the return on assets higher, indicating that Tesla efficiently manages its balance sheet to generate profits. Similarly, return on equity has been rising with a small setback in 2023. Breaking down the cash flow from operating activities, sales of automobiles attributed to the most of the cash increase. As mentioned previously, Tesla has very little debt repayment and instead generated $3.7 billion from financing activities. Tesla spent almost $9 billion on capital expenditures, and even large portion was invested, $19 billion. So does Tesla have sufficient cash? Strictly cash, Tesla has around $16 billion. But as we add other marketable securities, Tesla is holding almost $30 billion in cash and investments. And with very little debt, Tesla is actually sitting on $24.5 billion in cash. Investors and analysts typically look at the company's free cash flows, which is calculated by subtracting capital expenditures from operating cash flows. In 2023, Tesla generated over $4.4 billion in free cash flow. Estimating free cash flows into the future and discounting them to present value, we can approximate the company's intrinsic value and derive its current share price. We calculate $213 a share. According to this model, Tesla is trading close to its true value. That's all for now on Tesla. If you like this video, please like and subscribe. We plan to provide similar content for all publicly traded companies.